Hi, and welcome back again to Tim Bigham's Big Time Options, Edges, and Hedges, taking a look at another vol capture reversion trade, this time on MRVL Technologies, where our previous one from a couple months ago, where we took advantage of the highest IV ever in MRVL to do a defined risk iron condor trade, selling out of the money call and put spread both with some definitive edge, plenty of cushion. We finally had that reversion get to the point. Happy to take it off for basically a 50% gain and move on. Out in September, traditional was the expiration, so no need to squeeze blood out of a turnip and hold on to the trade for that long, as we always like to do here at Big Time Options. We use our fusion approach, combining fundamental, technical, and most importantly, IV analysis. So let's jump in and take a look. Here's the trade, actually, again, going back to early June, taking advantage of the highest implied volatility ever on MRVL. We saw fundamentals, technical stretch. Certainly, you can go back if you want a deeper dive and take a look at that previous video. Here's the link here on the Option Optics YouTube site to take a look at that. But basically, we saw it hit up on the scanner back-to-back days where MRVL, as you can see, certainly was seeing big-time unusual option activity that absolutely spiked the IV and the valuations. Here you can see the day of the trade, how valuations had reached basically the highest level ever, right? We saw price to sales over 30 times, PE over 100 times, both by far the biggest extremes we have seen. We also saw IV reach an extreme. Here's the 90-day IV, just absolutely because of all that big unusual option activity that we saw back-to-back days. We saw IV spike up. We saw it move from the previous day up big time, right? Here's the Septembers that we elected to choose our trade. You can see here spiking to the highest IV level we have seen in a very long time. You can see the calls far outpacing the put IV too, which is normally a sign of maybe things are getting a little out of hand and maybe the red hot rally will begin to slow down. IV at the highest level ever, 100%, right? And here you can see I pulled off the 90-day 25 delta call and put, both ripping to by far the highest IV we have seen over the past 6 months. So we're looking to take advantage of this extreme, look for IV to revert back down, looking for those valuations to put a cap maybe on the stock to the upside. But as we know in this market, the upside may be limited, but it doesn't really mean you're going to get a massive downside correction, at least for the time being. So the trade that we put on, as we said, was simply going out. Here's the actual trade, selling a September sell strangle, the 400, 410 call spread, 200, 190 put spread, right, and receiving a very nice, net credit on the trade of $4.71. Here's the actual trade back going to early June, as you can see here. Upside break even over 400, right, or 30% from the stock, trading right around 300. Downside over 35%, plenty of cushion. IV at 104 and change, right? Fast forward then to yesterday, where we closed the trade out. We can see again IV where we sold it up here as we looked at that IV, that huge spike, right? IV finally reverts. This is that 90-day 25 delta call and put. You can see we're able to sell this enormous implied volatility spike, and now that it's come back down and kind of finding the floor it was at before for a little while, we elected to take the trade on, so we're able to sell IV up here, buy it back down here. The stock, as anticipated, really didn't go much of anywhere, right? So we're able to cover the trade for $2.50, right? For a net gain of $2.21 or $221 per spread. Net margin needed on the trade, $529. So it's a defined risk trade. So able to make over 40% on a defined risk trade with over 30% upside and downside cushion, right, in basically just a few months time frame. We still have over a month to go, basically, pretty much. Next September, expiration will be the expiration date, so no need to try to squeeze the last, blood out of the turnip. You can see we're able to sell IV back here at 104 and change on average, right? Able to cover it here well under 87. It dropped 18 vol points roughly, right? Reading to that almost 42% return on risk, right? And again, define risk, $529 max risk, right? Selling a 5-point wide iron condor for 471, right? Max you can lose if the stock blows up or crashes, right? If it exceeds that 30 and 36% kind of cushion, right? That's the most you can lose, but here it absolutely didn't do that way. So the stock actually dropped down from over 300 to 235 of the trade because it had plenty of cushion, right? Saw a 20% or so drop in the stock price, right? But still making over a 40% return because that huge IV edge, right? We were able to sell IV over 100, now covered well under 87. So hopefully provides insight how we go about identifying trades here at Big Time Options. Take advantage of these huge run-ups and implied volatility. We know trees don't grow to the sky forever. Looking for IV to come back to earth, as it certainly did here, right? Take advantage of the fact and then have that very nice return of over 42% on the trade when it does. So until next time, as always, here's to good trading. Take care.